Welcome back, everybody, to a brand new episode of the Speculators Podcast. In this episode, we're going to be hearing from some of our past incredible guests that have been trading for years. They're seasoned. They've been down the road. Anything that you are currently struggling with, they've already struggled with it, and they've come out the other side the victor. And in this episode, we're going to be hearing their best advice to traders that are still struggling with consistency. I hope you get a lot out of this episode. I hope you pay close attention. Let's jump right in.
I tell traders, the goal, there are different steps. And the one thing that draws people to trading is they want to get rich. I saw Ken Griffin, he's a rich guy. I want to be like Ken Griffin. I want to be like Warren Buffett. But, none of them started rich. They all started small. And, your first goal is to stop losing money. Okay. And when you start trading, you should trade the absolute smallest position size you can trade. So you can trade 10,000 in euro versus the dollar. You can trade one micro E-mini. Just trade really, really small. And you're going to say, wow, I was a successful businessman. I sold my business for $5 million, and I could trade 20 E-minis or 100 E-minis. Yeah, you're a fool if you do it, right? Even if you have a $5 million account, you start trading one micro E-mini. And you don't just do it for a week or two, you do it for months, 6 months, and stop losing money. And then start to increase your position size. And, at some point you move up to an E-mini. And if you can start to make 4, 5, 6 points a day, several $100s a day, you can start to make money for living expenses. And if you can then increase to multiple E-mini contracts, you can make doctor and lawyer money, then you can have a pretty good lifestyle. And if you can trade 10 E-minis or more, you can make an outrageous amount of money. Again, not Warren Buffett, but you can have a really nice lifestyle.
I think the first thing to say is that I think rules are very important for traders. I come from an era where you were at your desk at 6 o'clock every morning, okay, and you worked till 6 o'clock at night. And, if you didn't do that, you weren't committed, you weren't dedicated. That's rubbish, okay? I think in the beginning of your career, you need to have a very structured routine and approach to your trading. But as you do this for long enough, you need to define your own rules. You need to know and define what works for you. Some people can focus for 10 hours a day and they can execute and be optimal 10 hours a day. Some people can't do more than 4 hours. So don't be afraid to do what you know is right for you. I think that's a really key message that, I've come to learn over my career. I don't do what's right for everyone else. Okay, I do what's right for me at the end of the day. Now coming to that, this whole sort of understanding my own rules started with when I was a very young trader. I used to prep on Sundays. And as a result, I used to be very anxious. I used to be very excited to trade on a Monday. It was anxiety. And so I really struggled to sleep on Sundays. And what I would typically do is I'd come in on a Monday, start of the week, and I'd be very sort of aggressive in the markets, wanting to be active. And Mondays was literally the worst day of the week for me, week after week after week. And I just spent the rest of the week getting my losses back. So I very quickly came to understand, look, if you don't trade well on a Monday because you're excited, the simple thing is come into the office, but don't trade in the Monday morning session. Okay, let the market show you its hand, get a little bit more understanding. That gives you time to kind of adapt and, wake up a little bit more, warm up to the risk of the week, and then start executing. That worked well for me. Okay, I've never ever stopped adopting that. If I have a bad Sunday night sleep, it's the same thing. Okay, that's the same approach I'll adopt. I just won't trade the morning session, and I'll trade the US session specifically. So that's the one thing. If I travel, this is another thing I had to learn the hard way. I'll never run positions whilst I'm traveling. Okay, and I know some people travel very well. Okay, I know a brilliant French guy who he traded off a laptop for 6 months traveling the US in a camper van and did fantastically well. Okay. The reality is everyone's got to do it their way. I don't feel comfortable traveling with positions on, simply because then I've got my phone on and I'm suddenly buying and selling, and the next thing I'm just doing all sorts of stupid stuff and I'm not actually enjoying whatever it is I'm supposed to be doing. So yeah, I don't look at markets when I'm on holiday. I don't care about markets. It is what it is. I'll come back and then I'll have my templates and my processes and it starts all over again. So yeah, I think everyone's got to define their rules for themselves. I think that's the real key thing. I define them as I understand them. Okay. Now, some really good traders that trade fundamentals will, for example, stay awake to trade the Bank of Japan in the early hours, 2, 3, 4 a.m. in the morning. Okay. It's not to say that that's wrong. For me, that's completely wrong, because at the end of the day, I got to get up at 5:30 and I got to get training, and then I got to get the girls to school, and then I got to get to work. And that works for me. It enables me to be optimal, to make good decisions. And that's how I know that that's the right rule for me. So yeah, I think you got to define your rules for yourself.
Let's say that there is a, from your experience and from your interaction with traders and through socials and stuff, let's say there's a trader that is just brand spanking new to the markets, kind of fired up, wants to be a trader, but actually wants to put in the work and actually wants to do this. What would be your direction point? If you can't work with them one-on-one, but you need to give them some direction of go down this road, where would you point them, and what would you say was like, here's your first step?
Well, I'm going to test the guy and be like, I don't think you really want to do this, because this is this is a very fucked up job. Emotional.
What's so funny is I've often had this same exact thought of, telling somebody who wants to trade, just tell them, you don't want to do this. You can't do this. You should forget about this, as a filter to where if that negative comment makes them feel like they can't do that and offends them and then makes them second guess everything, good. You actually are not cut out for it. But because if somebody would have told me that when I first started, that would not have swayed me. I wanted to be on this path. And if you hear that and I can't do it, you can't do it. But if that doesn't sway you, that's a great filter for, what, you should continue down this road. Yeah, not to cut you off though. Sorry, go ahead. You're going to test.
No, that's good. I want to push somebody, because they're going to really start to step up. If you're like, I don't know, you probably shouldn't do it. Here's what could go wrong. Because you really should not fucking do this job. It took me 4 years to find consistency.
Oh, quick.
It's going to take you years. Can you survive that learning curve? Can you survive that learning curve? You got a family? So if somebody is has the time to do this, it needs to be a hobby. And the moment you're like, I got to make money doing this because I'm running out of time, you're done. So if I want to keep pushing somebody, and if there are some traders that they just keep coming at you. And it's like, that guy is relentless. And that guy just might have what it takes, because this market, I don't know how it has been for you. Has there ever been a point in your trading where you're like, I can't do this, and you want to quit? Have you ever reached that breaking point, but then you just don't?
Yeah, no, it's a very interesting point where I've never really thought I can't do this. I've always thought this is my path. I see the end. I get this. And then along the way, I don't struggle with this self-doubt with it, but there's been a few very specific times, and because of how specific they were, I remember these times of sitting back and just having this reality check of, I actually don't know if I can do this. I don't know if I should stay down this road. But these are short-lived moments of defeat that, I'm sure is very normal to get hit with.
I think a lot of guys hit that point and they just don't come back. So I feel like every I don't know, at least retail traders, that's the only world I know. And I talk to a lot of them. It's just going to be a point where you're like, I don't know. There's just going to be a point where you might be sitting here going, what the hell have I been doing? Am I wasting years of my life on this? And if you can come out of that, and you keep hitting that point, and you can keep coming out of it, and you're surviving, you're not blowing tremendous amounts of money, then you might have what it takes, and you gotta love it. You gotta love it. People think they love it, but you gotta love the other stuff. You gotta love the sitting around doing nothing for hours. If not, brainwash yourself through self-hypnosis. You gotta love reviewing. If not, brainwash yourself through self-hypnosis. Reprogram the unconscious mind. And then, if I was to give somebody advice, price action is king. I find indicators like MACDs and all that other stuff, and even Delta, I've looked at Delta for years, and for me, price action is king. And the way those bars are moving is telling a story. And if you can just, because there's all these little mini auction zones on the 30-second, there's all these little ranges, and you could draw really small curves, and they always look like bell curves because it's all fractal.
Because it's fractal.
And if you can learn to read that price action like words in a book, or like the hieroglyphics in a pyramid, and just learn to build context and understand the auction market theory. I mean, you're an auction market theory guy. It's a religion. It's a religion. Understanding what that is, I think it can get way more nuanced and detailed, and every AMT trader has their own little spin. However, that price action that's making that curve is important. It's telling you a story. And the center of that curve, the center of those ranges is like gravity. A lot of the times it's going to attempt to pull it in. And the bigger that curve is, the more we're going to need to really escape the gravitational pull of that. So watch how it's moving on just the bars. Like you asked me, what's the one tool? It would be the 30-second chart. Those bars are telling a story, and it looks like words in a book. And just learn that ebb and flow, learn how these little ranges set up, learn when they sweep them, learn how they mid-roll, and just, it's tough because my videos are really long. I could spend hours and hours talking about it. So for me to just tell you something in 10 minutes, I don't think you can learn enough. So if I was to give some guy advice, it would go on for ages.
When you don't trade for the money, you trade a lot better. Not many people can trade for the money and win consistently. I've met thousands of traders in the 8 years I've been doing this. I have not met many of those people, less than 10. Majority of people are the opposite.
Yeah. And I would even say this is one of the things that makes trading very difficult is it's so eat what you kill. And to have that pressure is one thing. And then to have that pressure where it's, you actually need that eat. We've all been there. Say it's not the best.
And I mean, to the old, right, I agree. And to the old model of prop firms, a lot of them would float guys on the first 3 months of salary and be like, yo, we'll break you off $6-7 grand a month. Just breathe, bro. Your bills are paid. You can eat, trade. Don't trade to pay rent today. Let's see what you can actually do. Like the trader who trades to pay rent and the trader who just trades because he has his money in a good spot and his family's good and everything. Two different people. Even if they're the same guy, two different people. You know what I'm saying?
100%.
I've been both of those guys. I'm sure you have too. You can relate. Like that is two different versions of yourself.
No doubt.
Yeah.
From your environment of a professional environment where when you wanted to start trading, you were in this environment where you had to show up, you had to be there, you had to be dressed, you had to, interact with the world and really go for it. And the average retail trader, my experience as well, if you have a pulse and a checkbook, you can begin being a trader, in your pajamas if you want. From your perspective of the journey that it took you to get here, how do you view the average retail trader?
What do you mean specifically? How do I view them?
Do you think about them as just like they're on a good path and there's a lot of good traders out there? Do you kind of look at everybody as soft and a little lost and not really even knowing what they should be doing? And do you just have a general thought when you think of like the average trader out there?
I think there's a lot of nonsense out there. Yeah. I've got nothing but respect for retail traders. I've got nothing but respect for anybody that'll open up a trading account and to try to better their lives financially or the lives of those that they love, or both. It's nothing but love and respect for people that have the courage to do that, because it does take courage to do that. Whether you're trading stocks, you're trading SPY, you're trading ETFs, whatever, you're trading futures like I do. It takes balls to do that. So I've got nothing but respect for people to do that. There's so much nonsense out there, on Twitter. If you speak with authority and you say things with, confidently, there's going to be a lot of people that are going to follow you and start to imitate that. And, I feel terribly sad for people that are chasing those carrots and, you know, the sticks that are just, you know, leading them down bad rabbit holes, for bad metaphor. But I think 90% of traders fail. You know, out of the 10% of traders that don't fail, most of them break even, and maybe 1 to 3% of traders are going to make money and be consistently profitable. And out of that 3% that are consistently profitable, small amounts of that are going to, you know, make anywhere between $500,000 to 7 to 8 figures, you know, very small percentage of those. So if 90% of traders fail, why do I want to think like 90% of traders? I don't, you know. My experience on the floor, my experience in going broke. That's my edge, you know. I've got a nearly photographic memory. I can remember trades I made back in the 80s. I didn't trade in the 80s, but in the late 90s when I started trading in the 2000s, if I look at a chart, I can tell you what I did that day. So I can remember numbers, I can remember prices, I can remember targets, I can remember, you know, all those things come natural to me. So I build on those strengths. You know, I need to learn how to think differently and apply that differently than what most people do. And that's gonna continue to keep me in good stead. And I'm not gonna fight the algorithms, you know. I'm not gonna fight the markets. I don't average in losses. I average in profit. I add to profitable trades. I will never average in a loss, ever. I don't know anybody that makes money long term. I know a lot of people who've made a lot of money averaging losses. They get lucky. You know, I can't do that. I can't buy 43 halves, 43 20s, and then try to sell 43 40s. I've done that so many times for so many years with such big size that I know in the end how that ends, and it doesn't end well, you know. So I feel bad for traders that ultimately wind up thinking that you have to fight the market, you have to fight the algos, that you have to fight anything or anybody in order to be able to pull a few bucks out of the market every day. This isn't rocket science. What's the saying that this is the hardest easy money that you'll ever make?
Do you think that people are born to trade? Do you think that trading is something that you have inclinations towards that you should pursue? Or do you think trading is a decision you make that I want to be a trader, and then you work at growing into that? And anybody could do it.
I think everyone should try it. Just like I think everyone should work in a call center or be a server. So that you realize that your ranch is not that important. Calm down. Okay, just chill. Okay. Because the humanities of the market is the greatest revealer of what you need healed internally. So if there's ever a point in time you're like, I would love to get some healing, become a trader. Be in front of the markets with your finger on the button, because that's gonna battle your financial zealousness, your optimism, your eagerness to get rich and wealthy. I don't use the word greed because I truly believe that most market participants are not greedy. I feel like it will show your fears right in your face. I feel like it will bring out the worst and the best in you very, very quickly. It'll show you your money wounds. It'll show you what you need to be healed from. I think everyone should try it. Will everyone win at it? No, because not everyone wins at everything. That'd be asinine to even consider that. I think the people that get obsessed with anything have a greater aptitude to win. And then the people that will do anything in order to win that's legal will also do that. I asked some traders today who their biggest dream in the world was to make $20,000 a month. That was their dream. Like, if I could make $20,000 a month, bro, my life would change forever. I said, okay, I'm gonna name 3 things that I guarantee that you haven't done 1 or 2 of those. Hot yoga, stand-up comedy, karaoke in front of a large audience. And the majority of the participants have never done those 3 things. Now, are those 3 things revolutionary? No, but they're generally free, or they cost almost nothing. Hot yoga is like, what, $50? You have to go get over the fear of embarrassment. You have to get over the fear of being wrong. You have to get over the fear of losing. You have to get over the fear of looking stupid, because stand-up comedy, not easy. It's a little bit of a challenge. Doing karaoke, I can't sing at all, but I do karaoke sober. And hot yoga, you're sweating everywhere. You're not flexible. You've never done yoga before. You can't bend over. You're fat. You got rolls coming out everywhere when you're trying all the things. And so it puts you in states of being aware of how you're feeling. So I know it's a long answer to your semi-short question, but the people that are willing to put themselves into a position to learn the greatest market in the world, everyone should try it. Every single person on earth should be in the markets for a period of time to see what they can learn about themselves and what they need to get healed from. And then go find things that will heal you from those pains, from those scars, from those traumas. And as you go through that route, you will find another path to financial freedom. Maybe it's business, maybe it's sales, maybe it's working for someone and having a structure of your budget. Maybe it's developing a software, maybe it's building an app, maybe it's flipping houses. But you will find your path to financial freedom as you begin to heal your previous financial traumas.
You actually made a statement in the book that I'd love to hear you elaborate on. You said that fear knows no support and greed knows no resistance. Can you just elaborate on that idea and explain what that means to you?
Yeah, I mean, so again, lessons learned the hard way. I used to look at a stock and say, well, that stock's up 30% in 3 days. That's up too much. And I'm smart enough. I see this little 10-minute consolidation here on this 1 minute time frame. And as soon as it breaks that, I'm going to short it because it's up too much. And it'll pull back 25 basis points, and then I'll go take a 5% loss. Same thing on the downside. People will say, well, it's at the 10-day moving average. I've got to buy some because it's down too much. So there's no such thing as down too much. When there's sellers, there's sellers. Respect the sellers are in control. Wait for them to finish up. Wait for sufficient demand to come in to offset that supply. You don't have to be the first one in there to make money. Let it balance out and then reconfirm the prior larger trend. So it's just a way of saying, don't short because it's up a lot and don't buy because it's down a lot. Those are some of the ways that I've lost the most money ever in the market is doing those two things.
I would be under the impression, I'd be interested if you would agree with this or not, that when it comes to indicators, most traders are abusing them in the sense that they're not having these top-down approaches. They're not using these indicators to try and get a sense of what the context is and what the story is and how they can put together ideas. But they're using them to more blindly tell them where to enter. And that's kind of their trading experience, is looking at these indicators and looking for entries is basically, what they're doing. Do you agree with that sentiment? And do you think that there's a danger there? And if you're using an indicator strictly just chasing around entries, this is a bad use of an indicator?
I just think that most traders have redundancy in their chart. They have an indicator that's doing the same thing, right? That they'll have a lot of the same type of indicators, multiple momentum, multiple type of order flow tools, and they're looking for too much versus, I think that, and you use the word really like, do you say the word abused or the way that they're doing it, or they're that something like that?
Probably.
Yeah. It's the reality is that most new traders are just, they're searching. And the problem with that is that when you search for things, you're going to find something, but you may not find the right answers, right? And so I look at indicators as proof to me. I like very simple. Do I want to be long? Do I want to be short? The rest comes down to execution. And I know some people will disagree with me on this, but I think that there's a lot of different ways to make money in this business. I think there's a lot of different strategies. A lot of people will tell you that their strategy is, this is the best, right? Or whatever, right? But I've been around long enough to know that if I see a good trader, it doesn't really matter what strategy that they trade. They're going to find a way to make money. Some people are just bad traders. I mean, I hate to say it, but it's just reality. They're always searching for something. Their mind's somewhere else. They never could just hone in, look at the market and go, look, I want to be long. Market's telling me to be long. What's the best way for me to execute this? Then you put in indicators, and that's when strategy just, you start getting understanding what another one of my mentors taught me, context and nuance, what's happening in the day. Do you want to have a wider stop? Do you want to be more aggressive here at this price? What's going on around you? That's where the real trader comes in. I mean, the actual strategy itself, and I always say this, if you have a great strategy, if this strategy is so good, automate it. Just automate it. Tell me how good it is. Show it to me. I'll give you money. Because the reality is, if you really want to be a great trader, The strategy matters a lot. Don't get me wrong. But back to the new question, or the question about how new traders are just abusing their charts, or they're not using them in the right way. It's because they're searching. They're not being forced in. And there's a difference. I am someone who loves to trade. I'm an overtrader by nature. I love to be in the market. You never needed to force me in. I had health issues. Financially, I gave back a ton of money, sucked. I've done so many stupid things to put myself in bad positions. I don't want to go back there. Make me do it, because I want to make money, and I don't want to put myself through the physical pain and mental pain of forcing things all the time. I still have to fight this to this day. That's why I put in structure, because if I don't, I'm going to overtrade. I'm going to screw it up, because that's the type of person I am. I want to be in. I want to do it. I want to be active. Slow it down, man. Get something proved to you. Look at the direction. If you like the direction, trade it. You'll find a way to become a great executor if you find a strategy that you believe in, you're confident in, and it gives you that direction. One of the biggest things before I stop here is don't look at too many directions intraday. It's a kiss of death.
I want to take a quick break from the episode to talk to you about TradeAct. If you're on the trading journey, and if you're really about this life, you know that it's not easy. And if you're feeling lost in your trading, maybe you're not getting the results that you want, maybe you're lost and you don't even know if you're doing the right things and if you're heading in the right direction. Don't worry, TradeAct's here to help. From our flagship product, the Profile Method, all the way to our entry-level product, the Profile Formula, there's going to be something for everybody, regardless of where you're at in the trading journey. TradeAct is my company that I help start. All of the content that I create, all of the trading that I do, it happens right inside of TradeAct. So if you're ready to take your trading to the next level, click the link below. You can get started today. Now let's get back to the episode.
I think we have to define, what do we mean by a setup or a strategy? So 99 times out of 100 that I talk to a trader, and so traders often are coming to me where they're like, I'm just this close, right? Like I can see it. I can, predict kind of which side I want to be on the market. And yet my equity curve isn't up and to the right. What do I do? And so they're just that close. And I'll ask them, a setup question. Now, that's where the definitions don't sync, because if you scan, YouTube, anything that's available to a retail trader, very rarely will you find a setup defined by the destination first. If you talk to an institutional desk, very rarely will you find a setup that's defined by anything other than the destination. Why is that? Why does that exist? Because, like when I was
the opportunity is,
where I was running a managed desk for RJO, and like if I put $1 million on a trade of margin, like my risk manager sees that, he's going to come to my desk and he's going to say, like, what justifies this allocation of margin for this? Like, what are we what's the thesis? Why the destination? Why the timing? How do we know that we're wrong around that? But everything is built, the justifications, everything built on the belief in the destination. So when I find people who do, especially on the equity side, because this is pervasive, right? It's like I find this specific setup, which historically that may have been years past, that may have been like a moving average crossover, right? With a stochastic added to it, and that basically just they were trying to measure some turn in the market. Problem is they could scan for those, or they could scan for an extreme reading on an oscillator or something like that, but what does that tell you? It's just telling you that that thing is behaving in an extreme fashion. It's not, it's there's some conditions that are there, but where's it going? It doesn't answer that. So when someone says, I've got a strategy that I can scan for and go across that, I hear, and I always check, like, what you're scanning for is entries and the entry to an untold outcome. Well, if you have an untold outcome, how could you possibly set the risk against it? So then what do guys do? You hear them say, like, well, I want, a 3R trade or a 4R trade or whatever, because they've heard enough about like Monte Carlo simulations and stuff like that to know, well, I'm not going to be right every time. So I need like a risk reward ratio that's multiple. Okay, great. Here's the problem is, how do you know? Like they'll get in there, like, I'm trying to hold for 3. Was 3 available? Like, you don't have any expectation on a probability of where the destination was going to go. And so how do you know to hold that? How do you know it wasn't a 1-to-1? and then it reverses back on you. And then, yeah, you really are just kind of like, at that point, you can just pick a price, just pick any prices and just, do a 3R and see how long you bleed money before you're done.
I spent a very long part of my career just looking for strategies. Like you mentioned earlier, trading moving average crosses, but having no interest in moving average crosses. My mindset for the longest time was like, find something that makes me money, and like randomly YouTubing stuff or reading books and looking for strategies that make me money. And I failed with all of them because I didn't really connect with them. I was doing stuff that didn't really meet my personality, my philosophy on the market. And at the same time, I wasn't really improving as a trader because I was just finding a strategy, learning the specific rules of that strategy, but not learning anything about the market. It was when I took a step back, and this step back came basically right as I was going to give up. And I decided to like, hey, I actually want to learn about the market. I want to learn how to read price. I want to learn how to interpret a chart and tell you this and tell you that. When I started focusing on just reading a price chart, reading the market and understanding the ebbs and flows and the whys and hows, it made everything else easier. I was actually able to go back to a lot of those old strategies and understand them a lot better because now I knew the reason that things were happening, and it gave me a lot of confidence. Again, it was the difference between like if a trade comes to a certain level and I went overbought, and that's a signal to get short, which is not, by the way, if your viewers are listening. But the difference between just saying that versus being able to be like, no, this is a good level because this and this and this and this, gave me more confidence on it, and allowed me to do more confident things in the market. And I'm sure you would agree, a lot of trading is just having confidence in what you're doing so that you actually do the things that allow you to exploit your edge. So I think it was taking time to learn about the market, having an interest in learning the fundamentals about the market versus just looking for the thing that I can go in and gamble with, I guess you could say.
Yeah, really powerful idea here. And maybe I would say the sticking point of why most traders are failing. So much time and so much energy being put on looking for entries. And that's kind of the starting point of every trader that has massive amounts of frustrations is what's my entry? And they're just chasing around these signals, these groups, these indicators that are just going to tell them when to get, what's my entry? What's my entry? What's my entry? And to your point, evolving as a trader and understanding that it can't be the starting point. I can't look at the charts and just be looking at entries. There has to be something more. I need to understand why I'm doing what I'm doing. That's a very powerful realization. And I imagine that is a struggle that everybody has coming into the markets. And it's a really great answer.
The reason that trading has such a high failure rate is because the barrier to entry is very low. So I was talking to somebody about this who is in the medical field, and he told me trading is harder than surgery. And I'm like, really? And then I started thinking about it. I'm like, you know what it is? If you wanted to try anything professionally, you can't just try it. So, we can't just show up courtside at a Lakers game and be like, yeah, I want to try playing tonight in an NBA game, right? Or you can't barge into a hospital and be like, yeah, I want to try surgery today. I really want to see how hard it is. Mm-hmm. But anyone can open up a trading account and try trading because all it takes is, a few clicks of a mouse and a keyboard. Yeah. And I think that's really what dilutes people is the barrier to entry is so easy, but doing it demands the same amount of respect as you would give to doing anything professionally.
For sure. And something else that really adds to this, to your point, is there's no other field you can walk into. Like if you just want to try surgery, open up a chest and start knocking on somebody's heart, they're going to die. Like you step onto the Lakers game and try to play a game, you're not going to score a point. You know what I mean? Yeah. Step into the trading, you might make money, because it's either going up or down. And it's because of the randomness of this field, it is very easy to not know what you're doing and still win in the short term. And so back to that point of like diluting where people think that they can do this, whereas, they can't, or at least they're not on a good path for it. But you can finish your thought. Didn't mean to cut you off.
No. That's a great addition to the point. I mean, and to your point, I'm sure, you know, maybe friends and family or audience members. In 2020, everybody was a freaking genius, right?
Yeah.
I know someone that put $50,000 in Tesla calls and this guy's never heard of an options contract. He just heard about calls from someone else and was like, oh yeah, I'm bullish on Tesla. Okay, I'll buy these calls, even though I don't know what they are. He just went to Robinhood, bought $50,000 worth of Tesla calls, made $2 million in 2020. And guess what happened? He just kept buying calls. And guess what happened? A downturn happened.
Yeah.
That $2 million ended up at 100 and something thousand. You just kept doing the same thing. But to your point, I didn't think of that. You're so right. Is that you can have beginner's luck or come in right at the right time and, you know, even get further diluted that it's easy, but it's not.
If there was a aspiring trader out there that wanted to be a future market wizard, I know there won't be any other books, but how would you advise them? What would your advice be to somebody?
Is this somebody who has trading experience already, or
somebody fresh, just looking to get into the markets?
Okay, so if you're looking to get into the markets, first realize that you really don't know anything, and that your initial ideas are likely to be wrong, and your initial trading is likely to be unsuccessful. So having that framework is, don't expect to go in and, you know, although there are a couple of people in the books who were successful from the beginning, they are the exceptions. And I would say to begin with is you just, first of all, try reading different books about markets. It could be books like mine, which are more about, you know, general principles and stuff like that, as opposed to a specific methodology. Or it could be books where people are kind of showing some sorts of methodologies. It doesn't make a difference, but you got to kind of discover what appeals to you, what feels right, and then when you got that, take that to the market, and on paper initially, even though it's not the same, but you always start on paper because you know you don't know enough to trade real money yet. Try to see, okay, make paper trade. You know, use whatever approach you've developed, whatever rules you develop, do your trades, see how they work. If they start, and by the way, nowadays, of course, you can lots of brokerage firms offer, you know, accounts where you're not trading real money, and that's probably the easiest way to do it. So, but see how that goes. And if you seem to be making money that way, real money is very different, and emotions come into play and all that. But if you can't make money on paper, there's certainly no reason to believe you can make it real. So once you get to the point where you think you've got an approach and it seems to be working to some extent, then you can try it with real money and start small. One piece of advice I give people is take an amount of money that you can afford to lose, and that's what you use to open the account. And don't take all your savings and open an account, because you're liable to blow it all and not have a second chance. You always want to make sure that you have a second, third, fourth, fifth chance, because you know, as long as you have chips, you can continue to play. But once you blow all your chips, it's gone.
In your opinion, do you think anybody could become a trader?
No, I think there are certain personality characteristics that would be very difficult to unlearn, and I think there is definitely some segment of the population that is simply not cut out for it, mentally, personality-wise, discipline-wise. You know, it's not. I don't think it's a one size fits all type of thing, and just anybody can do it. Even for those people I think are naturally sort of inclined to it, or not really inclined, but maybe have all the pieces of the puzzle, meaning, okay, like, you know, I don't really have a gambling streak. I'm definitely disciplined. I'm patient. I can wait, things like that. I mean, you know, as well as I do, even for that type of individual, and I would kind of put myself in that camp. You're talking about years of development to get there. You know, I wasn't profitable right off the bat by a long shot. I mean, I took the normal kind of average learning curve that most people take, which was 5 to 7 years. It was the same learning curve for me, you know?
The easiest, most basic thing that anybody can do now that actually can create a placebo-like effect in the short term with those frustrations, with the FOMO, with the greed, like all those issues can be mediated. I say placebo because it's not a solution. And I say that with a big warning, because it's going to feel like a solution after a few days. And you're like, oh, wow, I'm in control of this. Take notes about your emotional state. while it's happening in real time. Just keep a piece of paper next to you. Right. I've got a worksheet on my website called a data collection worksheet. It's not complicated. You don't need to download it, but here's what you're doing. You're capturing your thought, like literally your thoughts, right? What emotions are you feeling? What is your body like? Is there tension in your head or in your hands? Do you feel heat in your chest or tension in your chest? Are you holding your breath? How are your actions different, right? Do you find yourself scanning, charts faster? You zeroed in on one? Are you overemphasizing a particular indicator? How does your change in your perception of the markets or your changing your perception of your own strategy start to change? Keep track of that stuff in real time, right? I'm not saying do it literally every second, but certainly as you notice some changes or as you notice, a mistake was made, reflect back on what was going on. Because what it will do is it will actually disrupt the momentum of that emotional pattern. Think about like the first rule of, I think it's thermodynamics, like object in motion stays in motion until acted upon by an outside force. So all of the patterns that are within us, they will go to their natural, nasty conclusion, unless you get lucky and make money in the next trade. Or, if you're getting overconfident, lose. Or, you take a break, markets close. Like there's obviously, things that can happen, but for the most part, you've got to be that force. And so by writing, it kind of takes a problem that exists in your mind. And I don't know about you, but sometimes I will think things that would be quite funny. And as soon as I say them out loud, they're pretty dumb. So, like the mind kind of has this unreal quality to it. Until you actually get it outside of your head, it's hard for it to feel as real. So when you're writing something down, it can disrupt that pattern and give you little moments of clarity to say, maybe I should take a break right now. Or, okay, I see that. Let me make sure that I'm really precise with my next entry. And it just gives you those moments of clarity that can start to build on itself while you're actually building some greater sensitivity to, kind of the emotional patterning that, like I mentioned earlier, you want to begin to be aware of.
Yeah, it's crazy how the energy of trading and your thoughts can just get so built up and they can just become engulfing. And that practice of just maybe even writing it down or speaking it out, just something that kind of somehow breaks that energy of it. Very powerful practice.
Let me ask you, I don't know if you don't mind, can I ask you a question?
Hey, this is my podcast.
I know it's the other way. But
yeah, go ahead.
I always have this debate, and I've had people in the past that have kind of, I was dug in with one side, and it kind of steered me the other way, but I'm still in my stance. So I've always thought that you have to be passionate about trading in order to be successful. Because like you said, it's doing the extra stuff where it's not just showing up when the markets are in action, not just showing up when the casino is open and looking for money, but doing that extra stuff, spending time on the charts and being a student of the game. I'm curious your view on that. Like, do you think you have to love trading or be passionate about the markets in order to be successful in the markets, or is the result of what you can get from trading enough to kind of motivate people to take it to the level of, just okay to actually successful?
Yeah, I think maybe part of a bigger issue would just be, what exactly is it to like trading? And I think this is maybe where most people would get really off sides of not understanding what this job is and not understanding what it is we actually do around here as traders. And so I think most of us get into trading with a real misconception about what the job is. And so I think with like everything, there has to be passion, I would say is the wrong word, but there has to be a real interest in the markets, a real interest in the method that you're using. This is I think that we all have different aptitudes, and there's things that we naturally are drawn to. And if you're sitting there trading and you're following a moving average crossover strategy and you don't really know what it's happening, you don't really, you have no level of mastery over it, it will be impossible for you to get to those places, because at the end of the day, this is a performance sport. And it would be like trying to compete in the NBA, but not, really understanding the rules of the game, or not really understanding how to shoot the, whatever. So I think that there needs to be a real interest in what we do here. I think there needs to be a real hunger to compete. There needs to be some certain character traits that you have or that you're going to work on developing. And then beyond that, I think the passion for this and the real longevity in this business comes from
getting wins, and not, I don't mean like winning trades and losing trades, but I mean by seeing yourself improve and understanding, by seeing yourself improve and really understanding where this is all heading. Because in my trading journey, I've had some very dark times, long times, without real good or any type of results that would be positive, just losing money, just feeling lost. And I think we can all go a lot further than we imagined we could if we understand that I am making some sort of progress, maybe if it's not a dollar amount, and if you really understand where this is all going for you. But trading gets very dark and this journey gets very long, and if you don't understand where you're heading, and if you're not making some type of measurable progress, it doesn't have to be P&L, but some type of measurable progress, yeah, you burn out and it gets really ugly. But yeah, I think it's tough to answer that for me in a very quick thing, because I feel to answer that correctly, it needs to be fleshed out a bit. But I think it's a really nice question, and it's a good topic to talk about, because I imagine a lot of traders are very confused. They think they like trading, but what they really like is that random rush of, is this working? Is it not working? And that's very addictive.
I like the word interest. I do, because yeah, I'm like passion is like, I'm passionate about it, but it's interest, curiosity, like that drives. Yeah, I like that. That's good.
Yeah, and the passion comes, like you're not passionate about something if you just suck at it, and if you're not getting good at it, and if you don't understand it, you know. But when those things start to build up, you do, like when the results start coming in, and you start seeing these growth, you know, the passion gets built, I think, for sure. Really nice question. Anything else before I move on?
No. Back to you.
You've talked about your journey and kind of finding your way into it, and you've talked around this idea of leaning into your strengths and finding something that is very much working for you, and something that you know gives you an edge, and maybe paving your own way. And I think for all traders, there's this balance of, you have to be able to be your own person and to make your own trade decisions, and to have radical self accountability and responsibility, and almost be able to come up with your trade ideas. And there is also a huge benefit in, you know, standing on the shoulders of giants and learning from somebody who's gone before you. But it's never as easy, or it's not, the path forward is not, you know, buy a program from somebody and then this is the secret, or this is going to fix all your problems. It's a, you know, could be a good start. A long way of asking the question, but could you speak about this balance of making your own way and becoming a trader? But if you are learning from somebody, or if there is somebody you're leaning against or helping you, what role they should be playing in that development?
Radical responsibility is key and integral to any kind of long-term success that any of us are going to have. There are, you know, and then, you know, this is a much more nuanced conversation, I think, you know, than just a couple of minutes. Is there is so much information out there, and most of it nonsense, or most of it partially cool and partially garbage, and or you know, it's difficult to tell. You know, the standing the test of time, you know, is what ultimately is where the proof is. And if somebody is willing to share their struggles and how they overcame them, you know, and they're honest about it, then that's somebody that I want to follow. You know, some of my best follows on Twitter have 50 followers, you know, and you know, but I follow what they say. They're putting out original content and original information, and they're honest about their experience. You know, I hesitate in coming on a podcast like this and sitting here talking about my technicals or talking about, you know, the mechanics of things, because everybody does that. I like coming on here and talking about my experience, because not many people do that, and even fewer have the kind of experience that I've got, and even fewer that have the kind of experience that I have are willing to share it and be honest and open about it.
Yeah.
So I think that's where my value, the trading methodology that I developed over a long period of time is very, very important. But I can have the high and the low of the year, and unless I am mentally, spiritually, and physically fit, I am not going to be able to make money in it. You know, and that's the key. I need to be able to, I developed this strategy, I implement it every day, but if I'm not taking care of myself, and I'm not self-possessed, I'm not self-assured, I'm not self-confident, I'm not in self-control, none of it is going to happen. None of it's going to matter ultimately. I'll find a way to sabotage it. When I start thinking, what a great trader I am, my weaknesses are in the background doing push-ups, waiting to pounce on me, and I've got to be mindful of those.
Best advice for passing a combine?
Dilute the power of FOMO. Slow down and understand that the loss limit is there to help you. The daily loss limit is very, very important. We're going to have a big announcement on the daily loss limit at Top Step, but it's not ever going to go away. But it may not hurt you from advancing to go forward. And if you shut yourself down hitting your loss limit for the day, that's a good thing. Go enjoy the outdoors. You're a trader. You're supposed to be understanding the work-life balance. Don't go, resetting so quickly. Wait, save it for another day. Paper trade the rest of the week, and then start afresh on the next Monday. So slow down, patience and discipline can eventually build consistency. And if the consistency is poor results, at least you know what to work on. And then when you get your poor results into scratch trading, that's good. And then you go from scratch trading to profitable trader. But you have to be a disciplined, consistent, and then you'll eventually get a profitable trader. So discipline, consistency are very key. So that's just managing your emotions. I don't think you can control your emotions, but you can control like what you do, clicking the button. So go take breaks, take 15 minutes, go clear your head. That's a big one. So it's basically a lot of emotional stuff, Korbs. I think we all know that going on tilt happens. Mm-hmm. So however you can find a good balance of managing that. And then you have to trade a lot of screen time. And I wouldn't do that with your personal brokerage account. And you need to understand a lot of market conditions. Today, dead. I mean, I don't know if you've been watching the market. Yeah, exactly.
Yes, I have.
It's just like way back in the day when I was in trading pits, you would see other traders when it was dead, they would sit down on the trading pit and people would bust out cards and start playing cards. Because they're not looking for the market to come. Like, you let the market come to you. If you're always like, well, it's setting up at a bear flag, bull flag, retracement, 50% Fibonacci, you can talk yourself into any trade. And they always say charts is the astrology of traders. So you can create this whole thing. And just like, it's an opportunity. I keep pointing to my trading screen. It's an opportunity making machine. It's going to be here forever. It's been here forever, hundreds of years, or some odd hundreds of years. Will you be here? And I think the whole game is just be there. Even if you're in the minor leagues, you eventually will get yourself in a position where you can bat and hit the 90-mile-an-hour fastball consistently. And you know how to lay off the curveball because you aren't any good at it because your coach, free coaching at Top Step, or your own personal mentor, your trading buddy, or your own self taught yourself to say, lay off the curveball, Michael. That's the lowest probability trade, so to speak. Find out what you're good at. Windows of opportunity. I was never good on Friday afternoon. My head was probably already in the weekend. Tuesdays and Wednesdays, Thursdays are my sweet spots. And then find your trading routine, prep, trade, and then reflect on it. These are all just great things. And I love working with traders. I see your stuff. It's incredible. There's people that are really doing good in the space. And those are the people that I think will be here for the long haul, because traders or aspiring traders will go to the quality and the people that they know care about their best interests. But also in the end, you still have a business still. You have to provide, whether you've got courses or chat rooms or funding opportunities, you have things to do there. So if it's a win-win, then I think it's a good relationship. But all in all, those emotional traits or whatever that you have that are your weak spots, find them and then work on them.
Let's say there's a new person, a young person. I think that the idea of being involved in the markets is just increasingly becoming very alluring to people, maybe even in a predatory type way. But let's say somebody's kind of young and they're looking to no real experience, but they want to be involved in the markets, probably enticed by, some type of day trading, maybe enticed by the Forex market. What would you say if you were just talking to somebody like this and they just blanketly asked you, what would be some advice for a young person trying to get started in financial markets?
So this is what I say. and everybody laughs at this, okay, but I mean it. All right. What would you tell somebody if they came to you and they say they want to get involved in the markets, and what should they do? I always say this: go to law school. That's my answer. Go to law school. This is no way to do it. Okay. Go to law school, get hired as a lawyer, make $500 an hour. Okay. So that you have a nice base. And then if you want to trade, then trade. Okay. As a second income. Right. But doing this as a first income, it's an extremely difficult life, man. You know what I mean? And it's far from guaranteed that you are going to make money. In fact, very high probability is that you're not. So you're going to have wasted a very long part of your life. And I am a big believer that you are not going to learn how to make money until you learn how to lose money, right? And that is something that takes a while to do. You know, you're not going to go into this being like, oh, I'm going to go lose $1 million so that I can then learn how to make money. You're not going to go into it like that, but that is what's going to happen. I can almost assure you, okay? Because it's happened to everybody that I know, including myself, more than once, right? So either get a job at a hedge fund if you can, right? So that you have a salary, or be a lawyer, get a good salary, and then use your savings to trade, and then go through the whole thing that everybody has to go through: make, lose, make, lose, make, get to a point where you feel like you're steady making. Okay. And then if you've saved up enough money, then quit your lawyer job and become a trader. But to just go right into this, man, and just go into trading and think that's how you're going to make your living for the rest of your life, I wouldn't wish that upon anybody. I did it, and it was stupid. Okay. Yes, I learned how to, hopefully the lessons that I learned are what led me to where I am now. But I can tell you right now, I'm 57. Okay. I was 37 and I had 3 kids and I was dead ass broke. And it's a horrible way to go through life. So learn your lessons while you're making real money at a real job. That's my best advice. And then, hey, look at me now. I'm a good trader. I just put up 3 great years of trading. I can do this. Okay, good. Then quit your job and now trade.